What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Over the last year, gold's performance has been lackluster, to say the best. This has led many investors to be exasperated and just be fed up and throw in the towel. It's also led many financial pundits to be able to run victory laps and declare that gold is dead, especially in light of what just regular equity markets have done over the last year, and especially assets like Bitcoin have done over the last couple of years, just these massive mind-blowing returns. So today, we're not going to look at sentiment, we're not going to look at opinions, we're just going to look at some numbers so that we can answer the question, is gold dead? Ready? Let's dive in. In today's day and age, it is becoming increasingly difficult to accurately categorize gold. Because with most assets, you're either expecting you're going to make money or you're going to lose money. This is true if you're selecting stocks. This is true if you are holding onto dollars because you're virtually guaranteed to just lose purchasing power over time. And these two dynamics have led a lot of people to invest in highly speculative, highly volatile assets like Bitcoin that have had mind-boggling returns over the last couple of years. So where does gold land in this mess? Increasingly, especially over the last year, many have been placing it in the camp of fiat. Just slowly lose money over time. The problem is, public perception doesn't exactly line up with hard data. So let's look at some numbers, both long-term and short-term, to show that gold is still doing its job. And that job, by the way, is savings. So first, let's look at gold versus the dollar. Gold carried a legal price of $35 an ounce from 1934 all the way through 1971 when Nixon closed the gold window and the free market was able to determine the price of gold once again. As of today, the gold price is $1,760 per ounce. This is a total return of 4,900% over those last 50 years. So over the last 50 years, gold has outperformed the dollar by 4,900%. Pretty good start. But you say nobody over that time frame especially is comparing gold to the dollar seriously and saying that it would have been better to hold dollars that whole time. What they're really looking at is something probably like the S&P 500, which is an asset that makes you money over time, right? Well, okay, over that same period of time, the last 50 years, let's compare gold to the S&P 500. Oh, would you look at that? They basically match. Interesting. 50 years ago, if you would have had the choice to invest in the S&P 500 or in gold, many people would tell you that you would have been far better off by investing in the S&P 500 than gold. Now, you might say that's cherry-picking dates, because it is. So let's look at a different date. Let's look at the last 20 years instead of the last 50 years. We go back to August of 2001. Gold has had a total return of 560% since then. And would you look at that? This is over double the return of the S&P 500 over the same period of time, which is 265% total return since then. So is this still cherry picking? Yes, of course it is. So let's look at another date. Let's look at the last 3 years and see how they've compared. Since August of 2018, gold has returned a total of 48% versus the S&P 500, total of 55%. So is this still cherry picking? Yes, it is. But it shatters the perception that gold is dead, that gold is a shiny pet rock that does nothing, goes nowhere, has no place in a portfolio, especially in light of the dogmatic religion of index investing. I'm not even saying gold is an investment. It's not. It's money. They're different. But if you can find periods of time, both long-term and short-term, 50 years, 20 years, and 3 years, where money severely outperforms or matches the return of something that's supposed to be the best investment ever, you've got a problem. What this really means is that inflation numbers are probably understated and that most returns that we're seeing in the stock market are simply inflation. Now, this also means that stocks are a decent inflation hedge because they've kept up on pace with gold, so you've preserved your purchasing power, but they've done just about as good as gold over the long term. It also means it hasn't made you rich. You've maintained your purchasing power, which is great. Now, instead of comparing gold, which is money, against a popular investing vehicle, an asset like the stock market, let's compare it against inflation to see how well it's done its job over the years. So how much purchasing power has the dollar lost over the last 3 years? Well, obviously, depends on who you ask. And I'm using the last 3 years specifically because most people agree that gold has held up pretty well. If you look at 20 years, 50 years, it's had some fantastic returns. Most people even acknowledge, yes, gold holds holds up for inflation if you look back thousands of years, because you can look at things that aren't affected by technology, like the wages for an army captain are the same as a wage for a Roman centurion when you measure it in gold, and something like a custom three-piece suit would cost you the same today in gold as it did a couple hundred years ago in gold. So things that are not affected by technology typically will cost the same over time when priced in gold. But especially recently, in light of the emergence of cryptocurrencies, especially Bitcoin, and the alleged manipulation in the gold and precious metal markets, like especially silver as well, lots of allegations of manipulation there, many are saying it's not even worth it because it can't keep up and do its job. Just look at inflation. So we're going to look at three different measures of inflation. The first one is obviously we got to look at the official numbers. If you go to the BLS, the Bureau of Labor Statistics official website, you can see what they report for the the CPI, and you can see that for the last 3 years, they're reporting that the cumulative inflation has been 7.82%. Cumulative for all 3 years. If you look at private statistics on the opposite end of the extreme, the highest estimation I've been able to find for the last 3 years is approximately 39% from Shadow Stats. And this uses the same metrics that were officially used in the 1980s before there were a bunch of slimy changes made to how inflation was measured. Now, these are likely two extremes that are both almost certainly incorrect at the far end of the extremes. 7.82% cumulative inflation over the last 3 years versus 39% cumulative inflation over the last 3 years. Likely the truth is somewhere in between. And as pointed out by Lynn Alden, this is partly because there's kind of a cap on what inflation can be, and that cap is going to be the broad money supply growth. So what has the broad money supply growth been like over the last 3 years? Well, it again depends on who you ask. There are many different ways to measure the broad money supply, but one of the most widely accepted measurements is called M2. M2 has had a cumulative growth of about 30% over the last 3 years. So inflation is likely closer to the private estimates, in my opinion, which is at 39%, than it is to the official estimates at 7.82%, but there's really not a high chance that it's above that 30%, because really you've kind of got a cap on how much inflation you can see, which is the growth in the supply of money. So in light of all this information, how has gold held up against inflation? How has it held up as a store of value? Because remember, gold is savings. The point of gold is to make sure that you can still buy the same amount of things regardless of how much time goes on, regardless of whether there's inflation or deflation. It's a store of value. It's a savings vehicle. That's its goal. That's its point. That's why you would buy it. So if gold has held its own against inflation, it would need, if the official numbers are true, it would need to have returned at least 8% cumulatively over the last 3 years. And if the worst estimates of inflation are true, it would need to have returned 39% over the last 3 years. And do you remember what gold has returned over the last 3 years? That's right, 45%. So even if the highest possible inflation numbers from private estimates are true, gold has still done its job, despite the last year of the price drifting downward. And this is why it's important to remember that the point of savings is to retain your purchasing power. If everything doubles in price, this is inflation, gold would follow. But if the stock market drops by 50% and real estate drops by 50%, and you wake up tomorrow and gold is trading at $900 an ounce, did gold do its job? Yes, because it's there to make sure you can still buy the same amount of stuff. Savings doesn't make you rich. Savings retains your purchasing power. Real savings provides you with a sum that you can use to make a purchase regardless of inflation or deflation. Now contrast this with fiat, which actively dwindles in purchasing power over time when you have inflation, which we always do. And if there's ever deflation, you'd get a spike in purchasing power. This is not a store of value. Fiat isn't savings. It's much closer to a speculation when you look at how it responds, how your purchasing power responds to what goes on in the markets. Now, there's still room for some in a portfolio, but fiat is not a store of value. And neither is Bitcoin. Yet. There's still room for Bitcoin in a portfolio, but gold is still the pristine savings vehicle. It's still a functioning store of value. So just like Mark Twain, the report of gold's death has been greatly exaggerated. And finally, if you'd like to buy gold and you just have no idea where to get started, I've got my ultimate guide to buying gold linked in the description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.